Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. Key. With financial professionals and a wide array of resources, Key develops customized solutions to help customers maximize their wealth. Conkling, Fiscom, and McCormick's Me2You Marketing, providing word-of-mouth marketing services to build, sustain, and measure consumer conversations about your products and services.
Stocks take it on the chin again today, with the major indices losing ground for the fourth session in a row. The Dow slides another 71 points, closing below 11,000 for the first time since March 9th. The Nasdaq Composite slides 11 points.
The head of the Business Roundtable, Hank McKinnell, says America's CEOs are feeling pretty good about their companies and are bullish on sales. We'll talk about that with McKinnell and prospects for his company, Pfizer.
A chemical reaction for the shares of DuPont. The stock slides on a brokerage downgrade on concerns about how well chemical companies can perform in a slowing U.S. economy.
Also tonight, why cash may be king when it comes to your portfolio. It's one place where a rising interest rate environment can really work in your favor.
I'm Paul Kangas.
And I'm Susie Garib. This is Nightly Business Report for Wednesday, June 7th.
Nightly Business Report is made possible by...
I'm gonna miss you guys.
Congratulations.
Good luck, Gary. Bye-bye. Thanks.
Hi, Care Bear.
Leaving one job for another?
Hey, Gary.
Don't forget to take your nest egg. Objective financial advice can help you roll over your retirement money. A.G. Edwards, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
Additional funding provided by the National Association of Realtors. This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. The losing streak continued on Wall Street as investors continued to fret about inflation. The Dow fell 71 points and is now down about 330 points, or about 3% just since Friday. The Nasdaq dropped 11 points today. Meanwhile, in the bond market, Treasury sold off as a Federal Reserve official warned about inflationary pressures in the economy. As Suzanne Pratt reports, investors are now concerned about some worrisome trends in the bond market.
Stock investors have enough to stress about these days, what with the strong possibility that the Federal Reserve will hike short-term interest rates later this month, as well as surging energy costs. But there's also something else. The bond market has been sending smoke signals to investors about the health of the U.S. economy. First, the yield curve in the U.S. Treasury market has been flirting with inversion. That's when short-term rates are higher than long-term rates, and it's typically an omen of economic slowdown. On top of that, the yield on the 10-year Treasury bond recently dipped below the federal funds rate, which is at 5%. That is a big deal to bond market participants because the 10-year to federal funds rate gap by itself has been a good predictor of a slowing economy, if not recession.
When the 10-year yield goes below Fed funds, stays below Fed funds, and deepens that move, that's something you want to be concerned about. So what we have right now is the beginnings of a signal for something the Fed wants to be wary of.
In the last 16 years, the yield on the 10-year Treasury has dipped below the federal funds rate 3 times in 1995, 1998, and 2001. In all instances, the gap preceded a cut in interest rates by the Federal Reserve. In 2001, it also preceded a recession. Few experts are predicting a recession this time around, but they are concerned about growth.
Most likely what this means is that the bond market is sniffing out a slowdown in the economy and possibly a rate cut sometime in early 2007.
In a speech on Monday, however, Federal Reserve Chairman Ben Bernanke made it clear to financial markets that he will be a vigilant inflation fighter, even if it means sacrificing economic growth. Is Bernanke paying attention to what the bond market is saying about growth? Experts say absolutely.
The Federal Reserve and Mr. Bernanke and all officials, I think, are certainly very much keen to follow the capital markets and are certainly looking at what the curve is suggesting. And the curve is suggesting that, indeed, that maybe right now there's more of a concern about growth than inflation.
Right now, the bond market is also sending a very clear message about the Fed and its June 28th and 29th meeting. Fed funds futures are pricing in an 80% chance that policymakers will hike rates again at that meeting. Suzanne Pratt, Nightly Business Report, New York.
Oil prices fell sharply in New York trading today after an unexpected build in U.S. petroleum inventories and an easing in tensions over Iran's nuclear ambitions. Light sweet crude for July delivery ended the day down $1.68 at $70.82 a barrel at the NYMEX. The Federal Energy Information Administration says petroleum stocks grew across the board during the last week thanks to strong crude imports and weaker demand for gasoline. The nation's crude oil and gasoline inventories each grew by about 1 million barrels. Meanwhile, it looks like Iran is warming to the idea of talks over its uranium enrichment program now that the UN Security Council members have dropped a demand for Iran to permanently halt its nuclear program.
Speaking of energy, that's what former Federal Reserve Chairman Alan Greenspan was doing on Capitol Hill today before a Senate committee. Greenspan told lawmakers that high oil prices have not produced a serious erosion of the world economy, but they may be starting to pinch economic growth. It was Greenspan's first appearance before Congress since leaving the Fed 4 months ago. Greenspan said oil prices above $70 a barrel are due to a dramatic decline in global production capacity. He added that the flexibility of the U.S. economy has helped it weather such sharp increases.
The United States especially has been able to absorb the huge implicit tax of rising oil prices so far. However, recent data indicate we may finally be experiencing some impact.
But Greenspan warned lawmakers against interfering with the oil markets by placing restrictions on prices or imports. He says that would undermine U.S. economic flexibility and make the country more vulnerable to spikes.
Wall Street spiked higher this morning as buyers looked for bargains after 2 days of steep losses. That sharp decline in oil prices was another plus. So the Dow stair-stepped its way to a 63-point gain by noon, and the Nasdaq was up 19. But the market turned abruptly lower when the early rally did not impress buyers, and those Greenspan comments on energy spooked investors. The Dow Industrial Average came in with a closing loss of 71.25 points at 10,930.90. The Nasdaq Composite fell almost 11 points to 2151.80, while the Standard & Poor's 500 index fell 7.70 to 1256.15. Over in the bond market, the 10-year note fell 6/32 to par and 25/32, putting the yield at 5.03%.
America's business leaders expect the economy to stay strong for the rest of the year despite high oil prices and rising interest rates. A new survey by the Business Roundtable says its CEO members expect the economy to grow by 3.4% in 2006. The survey also says 83% of the CEOs expect their sales to increase this year. 48% plan to increase capital spending this year, and 41% will hire more workers. Still, the projections are down slightly from an earlier forecast. Earlier today, I talked with Hank McKinnell, chairman of the Business Roundtable and Pfizer, and asked him why CEOs are less bullish than previous surveys.
The decline is probably not very meaningful. This quarter's diffusion index of future economic growth is the third highest we've ever seen. The CEOs of America's largest companies are expecting 3.4% growth this year, which is both strong and sustainable.
Addressing that 3.4% economic growth, as you know, this week, Fed Chairman Ben Bernanke has been talking very tough about inflation, and the implication is that interest rates may be rising. Will that impact your economic growth outlook, do you think?
Well, in spite of rising interest rates and the higher cost of energy, which is probably a bigger factor, America's CEOs remain optimistic about the balance of this year.
What about CEOs' views on inflation? I know it wasn't a question in your survey, but what are you hearing from them about the impact of inflation and higher interest rates possibly on their businesses?
We're certainly seeing the impact of higher energy prices, particularly over the last 6 or 7 months. That's a major determinant of cost pressure on companies, not labor costs, importantly. But there's little or no opportunity to pass that along to the consumer in this very competitive marketplace. So we see cost pressures, but aren't particularly concerned about inflation, at least in the near term.
What about in terms of spending and in terms of hiring? How do you think that these cost pressures, interest rate increases will impact plans by CEOs in terms of spending and hiring?
Well, this is the third year of a very strong economic expansion. You would expect capital spending to be leading at this point, and 48% of our CEOs expect capital spending to increase. 48% expect it to remain the same, so that is a very strong number. On hiring, 40% plan to increase hiring, 40% plan for it to remain the same. A little less bullish maybe than a quarter ago, but still predicting very strong job creation in the American economy.
How about at Pfizer? What is, from your perspective, how is this new economic environment impacting your business?
Our business is primarily driven by product cycles, which are exceptionally long. You cannot look at the value of a research-based company like Pfizer through quarterly results or even annual results. Every new invention this year will not come to market for 12 to 15 years. And we are in a very important part of that cycle. We launched the most important new cancer medicine earlier this year, and in the next 6 weeks, we will be launching an important new medicine for serious fungal infections, the first targeted treatment to help smokers stop smoking, and the first advance in insulin therapy in over 80 years. It's a very good time for Pfizer.
There's been a lot of speculation that Pfizer has found a buyer for its consumer unit, your franchise of Sudafed, Listerine, and other products. How close are you to a deal?
We're going down two tracks. One is taking this very strong business, its second largest consumer healthcare business in the world, growing at twice the market rate, to spin that off as a public company, which is a very attractive alternative. We've also received a number of very attractive offers from a number of other companies. The process is very competitive, and we do expect to conclude this sometime during the third quarter, but all options look very attractive.
Now, some of the analysts I've spoken to believe that Pfizer could get anywhere between $12 to $14 billion from this transaction. Put that on top of all the cash that Pfizer already has on hand. What are you going to do with that money?
Well, we do produce cash flow of about $16 billion each year, and that is rising over the next couple of years. We use that for capital expenditure and dividends, which we increased 26% early this year. Additional funding will go towards the acquisition of intellectual property and new products, probably small acquisitions, and the return of additional capital to shareholders. It's a very attractive time in terms of cash flow for Pfizer.
Can we expect a major acquisition from Pfizer?
I don't think so. We certainly look at everything that might be available, but we have the capability now around the world to do what we need to do. We are also always very interested in important new intellectual property or important new products, such as one of the ones we're launching in the 6 weeks period, a very important new medicine for serious fungal infections.
All right. Well, thank you very much, Mr. McKinnell. It's always a pleasure talking to you.
Susie, thank you.
They call it the death tax, but it's alive again on Capitol Hill. The debate is heating up this week over the estate tax. Last September, a bill to repeal the tax was pulled off the Senate agenda. But as Washington Bureau Chief Darren Gersh explains, now Senate Republicans have revived it and are using it to set up an election year fight.
Perhaps no tax issue stirs as much passion as the estate tax, or as Republicans brand it, the death tax.
When the patriarch of a family-owned business passes away, and half of the money in the business has to be paid to Uncle Sam, it can crush that small business.
Critics of the estate tax repeal say it's not family farms or small entrepreneurs who benefit. They argue permanent repeal of the estate tax is a $1 trillion giveaway to the wealthiest people on the planet.
This is the Paris Hilton tax break. It's about giving billions and billions of dollars to billionaire heirs and heiresses.
Under current law, the estate tax phases out in 2010, but reappears in 2011. Many Republicans want to make repeal permanent at a cost of $776 billion over 10 years. But there is talk of a deal to raise the estate tax exemption to between $7 and $10 million for a married couple. The tax rate would start at 15%, rising to a maximum of 35 to 45%. That would exempt all but a few thousand families from the tax. Given that the estate tax is currently paid by so few, it is surprising it has proven unpopular with a majority of Americans.
Tax these wealthy people more when they're alive, that you can get a good debate on, and many people are all for that. But tax them when you lose your spouse?
The estate tax battle takes on added significance this election year. Analysts now put the odds at 50-50 that Democrats will take control of at least one house of Congress. If that happens, Republican hopes for a permanent repeal of the estate tax may be buried for good. Darren Gersh, Nightly Business Report, Washington.
Boeing's new 787 Dreamliner jet is selling like a dream so well that the aircraft maker is considering doubling production on the model. Boeing said today the 787 is sold out through 2010, and there are still a lot of airlines interested in the plane. Boeing has already 360 firm orders from 26 airlines, with Japanese carrier All Nippon Airways set to become the first to take delivery of the model. The 787 is Boeing's fastest-selling aircraft ever, thanks in part to its use of composite materials that reduce weight and fuel costs. Meanwhile, Boeing's rival Airbus reported today that May was its slowest month of the year, with just 6 aircraft sold, and Paul, none of them were from its wide-body family of planes.
Well, Boeing shares rose on the news, Susie, gaining 81 cents to close at $81.46 a share. Now let's look at the rest of our stocks in the news tonight. The most active New York exchange issue on 24.4 million shares was EMC Corp, losing 23 cents. The company sees 2006 revenues at the low end of its previous forecast. Lucent Technology dropped 2 cents, and then Corning down $2.10. Standard & Poor's says the drop in Corning stock is probably tied to AU Optronics reporting that its May LCD sales fell 1.5% from April levels. Corning provides glass for AU's LCDs. General Electric off 15 cents. ExxonMobil on the lower oil prices off $1.55, fifth in big board volume. Then Pfizer gaining 7 cents. Nortel Networks at 6 cent loss. Time Warner dropped 2 cents. Disney up 12 cents, 10th in volume. Quest Communications a 4 cent gain. DuPont down $1.08. Deutsche Bank lowered its opinion of the U.S. chemical group from overweight to equal weight, and specifically downgraded DuPont stock from buy to hold, and did the same for a number of stocks in the chemical sector like Dow and Chemtura, just fractionally lower, but Spartek and Westlake Chemical losses of well over $1. Kraft Foods fell 68 cents. Prudential downgraded it from neutral to underweight, citing fundamental underlying problems in the packaged food industry. Then we see L3 Communications Holdings jumping $3.44, traded as high as $78.97. Its chairman and co-founder and CEO Frank Lanza died, but analysts speculate the loss of his leadership could make the company vulnerable to a takeover, and up went the stock today. DSW, the big shoe retailer, up $2.50 a share. First quarter earnings jumped to 40 cents from 25 cents a year ago, and that was 5 cents better than the street consensus. International Coal Group fell $1.40, about 16.5% drop. A variety of problems in the first half caused the company to now cut its 2006 earnings guidance from as high as 53 cents a share all the way down to 15 to 21 cents a share. Veritas DGC, which provides seismic data, down $6.25, even though after the close yesterday, third quarter earnings came in at 84 cents, well above 52 a year ago. Revenues jumped 35%, but you can see the stock has had quite a rise, so it was vulnerable to profit taking, even on good news. Lazy Boy down $1.84. Fourth quarter loss of 20 cents reported today. That's versus earnings of 40 cents a year ago. Sales dropped 10%. Raymond James Financial downgraded it from strong buy to just an outperform rating. Google topped the Nasdaq's most active list, down $3.48, followed by Intel, 40-cent drop there. Microsoft dropped 9 cents. Apple Computer losing $1.16, and Broadcom fell $1.25, fifth in dollar volume. Cisco, 26-cent loss. SanDisk down $1.47. A gainer, Sears Holdings up $1.93. Baidu.com fell $2.20, and Qualcomm a 69-cent loss. New issue today on NASDAQ, LoopNet, which is a commercial real estate website operator. 6 million shares offered at 12, opened at $14.75. The high, $15.75, backed off a bit, but still had a good first day of trading. Ace Cash Express up $3.59. A management group led by the CEO wants to buy the company out. As a matter of fact, it has accepted a $30 a share buyout bid. And finally, Analogic, third quarter earnings 18 cents, well below the street estimate of 41 cents. Those are the stocks in the news tonight. Susie?
Well, the Securities and Exchange Commission wants to bring penny trading to options. It's urging the nation's 6 major options exchanges to start quoting a limited number of options beginning next January. Currently, options are quoted in increments of nickels and dimes. The SEC says penny quotes will benefit investors by giving them better prices and encouraging competition among exchanges. Penny quotes for options would bring them into line with how their underlying stocks are traded. They went to penny quotes when fractions were abandoned back in 2001. The SEC says the idea would be start with a small number of options quoted in pennies and then expand out if it's a successful trial run.
Tomorrow, the plague of Parkinson's disease and the nation's baby boomers.
Here's a look at what's happening tomorrow. April's wholesale trade numbers and weekly jobless claims come out, and the Senate Banking Committee holds confirmation hearings for Federal Reserve Vice Chair nominee Donald Cohn and FDIC Chairwoman-designate Sheila Bair. In the Money File tonight, if you're in the market these days, you might want to look into money markets. Here's Terry Cullen, personal finance columnist for the Wall Street Journal Online.
Cash is king on Wall Street. After nearly 5 years of historically low interest rates, yields on money market mutual funds are now approaching 5%. Unlike CDs, cash in money market funds isn't locked up for a period of time, and the rates in the accounts respond more quickly to changes in short-term interest rates. If the Federal Reserve raises short-term rates this month, as many analysts are expecting, retail money market funds will likely boost their rates above 5%. That's because rates on money market funds typically track the Fed rate. With the stock market's recent swoon, investors have been pouring cash into money market funds. In fact, rising money market yields have prompted some Wall Street managers to advise their clients to reduce bond holdings and move the money into cash accounts for the near future. Investors are taking their advice. So far this year, $29 billion in new cash has gone into money market mutual funds. Over the same period last year, investors actually pulled out nearly $77 billion. Generally, cash investments should make up a small portion of your total portfolio, about 5 to 10% for investors in their prime earning years who can swallow a moderate amount of risk. Money market funds can be a great investment for short-term goals too, such as saving for a down payment for a new home. Shop around to find the most competitive rates and ask about any fees that could potentially eat into your returns. I'm Terry Cullen.
Recapping today's market action, both the Dow and the NASDAQ fall for the fourth straight session. The Dow slides 71 points, closing under 11,000. The NASDAQ loses 11 points. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org.
And finally tonight, it could be a goofy idea, but then again, it could be a big seller. The Walt Disney Company is going to market dog food. The company wants a chunk of the $75 billion global market for pet products. So it's been test marketing Old Yeller dog food at some Kroger supermarkets. The product, named for the 1957 Disney film Pooch, has become Kroger's best-selling dog food, and the two companies are investigating a new cat food line. And you probably don't know this, Paul, but Disney also sells an aquarium. It's based on its very popular Pirates of the Caribbean film and theme ride.
I wonder if Disney sells fish food in its treasure chest of products. I haven't seen it.
Nor I. That's Nightly Business Report for Wednesday, June 7th. I'm Susie Garrett. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
Buying or selling a home is a big financial decision. A realtor can guide you through the process and help you reach your goals. Is your agent a realtor, a member of the National Association of Realtors?
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more information about investing, you may order the NPR Video Library of Personal Finance by calling 1-800-535-5864. This program is available in either the VHS or DVD format.
We are PBS. Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. Key. With financial professionals and a wide array of resources, Key develops customized solutions to help customers maximize their wealth. Conkling, Fiscum, and McCormick's Me-to-You Marketing, providing word-of-mouth marketing services to build, sustain, and measure consumer conversations about your products and services.
And I'd like to suggest to you that inspiration is not something that comes and goes. It's not something that you have one moment and then in the next moment it disappears. And this is a whole new look at inspiration.
Dr. Wayne Dyer, America's foremost spiritual guide and mentor, presents 6 Steps to Inspiration, Your Ultimate Calling.
Your world changes.
Join us tonight at 8 here on OPB.
Business Partners Essential Retirement Guide, New Horizons Computer Learning Centers, and the Redirect Guide have made a contribution to Oregon Public Broadcasting. Additional funding has